Good morning, traders. Richard here doing a quick Ichimoku Cloud chart market review of the S&P 500. We'll start with the weekly Ichimoku Cloud. Still in bearish territory. Price action is still taking place below the cloud. That confirms the bearish outlook. And the swing trades we've been looking at is this rebound swing trade from these old cloud chart support levels back up to the bottom end of the cloud. That trade's worked out beautifully, and now the bottom end of the cloud, that's a major resistance zone there now, that level there of 4270 basically, as well as the front end of the cloud is another major resistance zone to deal with. So any kind of continuation of this rebound or a support rebound from this turning line of the cloud, yeah, that can last up to this 4229, 4230 basically, and 4270. That's a major resistance zone. So the market really needs to break past these levels and be back above the top end of the cloud for us to be bullish. But so far, do expect further downside risk in this market. It's currently testing the turning line, yeah, the green line support zone there, 3906, you can see there. So we kind of range bound for a potential swing trade from this zone back up to the bottom end of the cloud chart resistance. So it will be interesting to see if we're going to get that over the next couple of weeks in September, or the market's going to come and retest these lows of 3695 and 3602. So that's the downside risk, these two levels down here on the weekly Ichimoku cloud. Now turning to the daily Ichimoku, we can see markets fighting desperately to rebound from this cloud chart support level at the bottom end of the cloud. Yeah, so it's a significant zone, this 3906. And so far it appears that the market is testing for support at that zone. If we get a continuation of the support rebound, we should trade back up to the front end of the cloud chart resistance, and that coincides well with the standard line and turning line resistance zone. But that's the top end of the cloud there. That is a resistance level to watch out for. So we could retest the 4169 if we get a successful rebound from this cloud chart zone. Now, the outlook changes from bullish. Of course, price action is above the cloud so far, so that's bullish on the daily, to bearish if the index starts to trade below this bottom end cloud. If we dip through the bottom end of the cloud, we are moving into bearish territory on the daily Ichimoku cloud. So be aware of that. Then you're going to be going short on that drop through support zone there. But so far, looking for a potential rebound in the next couple of weeks from this cloud chart support level, if support holds at this level. If not, then we're going to dip back below the cloud. Outlook will change to bearish, and then that will take the long position out on that particular scenario. So a rebound potential from this 3924 zone back up to the top end of the cloud, yeah, 4169. So that's the upside potential with a little bit of resistance here of the front end of the cloud. But so far, as long as we stay above the top end of the cloud, the rally should be okay on the daily basis. Only the risk is if we dip below here, and then the market outlook will change back to bearish, and then we're looking at these lows again to be retested. Now, the 4-hour Ichimoku cloud will be in bearish territory because price action is below the bottom end of the cloud, yeah. And the front end of the cloud indicate that we might see further downside. So if this support level fails, the 3906 fails, and that's the daily Ichimoku cloud support level, we could see these lows being tested as well, and then these lows down here, 3750 being tested. So it's vital for the market to maintain a rebound from this area and get back up to the bottom in the cloud. But this cloud chart can be a resistance zone on the 4-hour chart now. So absolutely critical for the market to rebound from this level. If the rebound fails at these levels, then we're going back down to this bottom end cloud chart support zone to retest that level at 3824. And then these lows here will also be retested if the market does not manage to find that rebound from that cloud chart support zone there. So these are the lows, 3742. So these are the downside risk targets on the 4-hour chart if support fails. And if the rebound's successful today, then we should see the first level of resistance is 402, and then the next one is 480, and then the next one is 4114. So that's the upside potential swing trade on the 4-hour chart. But that is all subjective to the daily Ichimoku cloud, this continuation of a successful rebound from this cloud chart support level back up to 4169. And then we might run into trouble again, because on the weekly chart, We are still in bearish territory, so this might be a slow grind lower as price action is below the cloud. Now the monthly Ichimoku, really big picture perspective. The front end cloud chart, there's a major support zone at 3505, so that can be a downside risk target if support fails on that daily and it stays below the weekly. So that would be a target to get to 3,500 on the monthly Ichimoku, but we might not be there over the next couple of weeks. It might take a couple of months or two to get to that zone. But the weekly chart still gives an indication how extended the price action is from the top end of the cloud here. You can see this gap is quite a large, huge gap there. And that gives you the idea that the market is still kind of extended on a monthly Ichimoku. We've had a sell signal there on the monthly. We've had a sell signal on the weekly up here in this cluster. So there was a weak buy signal there, but a buy signal below the cloud is always risky. And then the daily Ichimoku also had that sell signal up here with the most recent rally. So if support fails at this level, then we're going back down to 3824, 3742 and 3695. And if the support holds here, we're going back up to 4169 on a potential rebound rally. Until next time, happy cloud chart trading. Bye for now.